Mayuresh Joshi of William O'Neill is now with us on the show. Mayuresh, Jubilant Foodworks, 635.
We'll wait, Rima, afternoon to you. In terms of management commentary, obviously, I think it's been a mixed set. Margins are a tad bit lower. The consolidated revenues are obviously higher. Standalone revenues seem to be decent. So I think standalone revenues is something that one should map very, very closely because of all the acquisitions that Jubilant has done on the console part. Standalone probably seems fine, but I think would wait out post numbers in terms of management commentary, giving more granularity in terms of how they see the quarters ahead.
Ashok Leyland, 8% up now, 8.5% as we speak. That's clearly the star of the day.
Oh, yes, absolutely. Ashok Leyland and Indocount Industries, I think both of them have probably rocked the markets on a day like this. Obviously, the positive commentary that Ashok Leyland has given out, both in terms of expectations of solid revenue growth going forward, expectations in terms of the pricing remaining intact, and their leadership position in the MNCV segment probably remaining intact and improving with more launches expected to come in the next few quarters. I think that really augurs well. The second element obviously is a large part of the expectation pool in terms of consistency in numbers now getting reported. So if numbers are far more consistent in the next few quarters, the poor rating and rankings that it carries, as we see it in MarketSmith India, both on the EPS front, RS front, they should show some element of significant improvement. So I think if quarter 4 is again consistent, I think there is a re-rating around the corner for Ashok.
Mayuresh, any thoughts on these names? Not just Siemens, but, I was talking to somebody who was at one of these conferences and they met a transformer company. I mean, demand doesn't seem to be a problem. Not for, I'm talking about Siemens, of course, is much larger and much wider portfolio, but I'm talking about a company like Trill, CG Power, many others. But it's all, again, valuations 50, 60 times for this growth. What do you like in this space, Mayuresh?
Absolutely. I think we met a few managements as well. I think the spaces which are coming out, where I think capex is coming back, where orders are coming back, seem to be thermal power, they seem to be idle power, and they probably seem to be cement. So I think these three spaces are where a few managements have evinced interest of a lot of orders and evincement of a lot of interest coming back. For the transformer space itself, right, the large macro picture is from 150,000 odd lakh circuit kilometers, you might see an addition of 125 odd lakh circuit kilometers in the next 4 to 5 years. The transformer capacity itself from 125,000 MVA is expected to double to cater to the burgeoning demand that probably comes through. And therefore, I think if you probably look at all the management calls, whether it's volt-amp transformers, whether it's transformers and rectifiers, they are full with orders. They're executing well. They're expanding capacities. And even with expanded capacities, I think the kind of orders that will still keep on flowing in will mean that the earnings momentum might continue. Obviously, I think valuations is one aspect that is extremely, extremely rich for all these companies put together. But a large part of the base structure that we see also seems to be at a higher stage. So I think the ideal situation will be to wait for a decline or wait for these stocks to make lower bases. But again, I think within the power theme, Prashant, I think the flue gas desulfurization players and equipment manufacturers might actually benefit over the next 2 to 3 years. There is a deadline of March 26 coming through. I think that might get extended. But even if that gets extended, there is a 1 lakh crore order book size out there. Very few companies to cater.
Very quickly, Hexaware. Is it a subscribe? Is it an avoid? And how do the financials and valuations stack up versus peers?
So again, I think a large part of mid-cap IT, Rima, I think is rich at this juncture. Obviously, expectation again, largely revenue growth expected to remain stable. Expectations in terms of margins, a lot of managements have alluded to the fact that margins might remain stable as well, and they're seeing good order traction probably coming through. So again, I think expected to see a reasonable growth, but again, our bet probably or watchlist stock might be emphasis, where I think generative AI, 34% of revenues might actually expand to more than 50%, contributing significantly on the EBIT front as well as bottom line earnings.